Join me as I dive into Trump's tariffs and see if they'll crush Canada's economy. Let's discuss Trump's new tariffs on Canada and their potential impact on the Canadian economy. These tariffs are putting a strain on Canadian businesses, making it harder for them to compete in the global market. These new trade restrictions will raise costs for Canadian companies. When companies can't keep up, exports drop. Trouble for the economy. Canadian businesses must rethink operations, find new suppliers, adjust pricing, or cut jobs to survive. And since businesses will be spending more to manage these tariffs, they'll have less money to invest in new ideas and growth. This could hurt innovation in Canada. So, what are these tariffs exactly? The new policy adds a 25% tax on steel and a 10% tax on aluminum. Trump's goal is to protect American industries. Historically, Canada and the United States have had a strong trade relationship. Billions of dollars worth of goods are exchanged every year. Canada's agriculture industry is one of the hardest-hit sectors. Farmers rely heavily on U.S. markets, and any disruption could hurt their sales. If Canadian wheat becomes pricier due to tariffs, U.S. buyers may seek other suppliers, impacting Canadian farmers. The manufacturing sector is also in serious trouble. Canada's automotive industry depends on a smooth supply chain. With tariffs driving up costs, automakers may struggle to produce affordable vehicles. This could lead to factory closures and job losses. If you're buying a car made with Canadian steel or aluminum, expect that price to go up. Appliances and building materials could become more expensive. For an average Canadian family, these tariffs could cost an additional $800 per year. And the job market? That's another concern. Experts predict that up to 6,400 jobs in Canada's steel industry alone could be lost. If steel mills shut down, industries that rely on those materials, like construction and manufacturing, could see even more job losses. Beyond just money, this situation could affect Canada's independence. If Canada doesn't respond effectively, it could signal weakness to the U.S. These tariffs are more than just an economic issue. They challenge Canada's ability to stand strong globally. So, what can Canada do? One option is to retaliate with tariffs of its own. This sends a message that Canada won't back down, but it can also increase prices. Another option is to build stronger trade relationships with other countries. By increasing trade with Europe, China, or India, Canada can reduce its reliance on the U.S. Economists are sounding the alarm regarding the potential long-term implications of retaining these tariffs, indicating that Canada could experience a significant slowdown in its economic growth trajectory. This stagnation could have far-reaching consequences for various sectors, as a weakened economy often leads to reduced consumer spending and lower business investment. Additionally, we might witness a rise in inflation, as companies may be compelled to shift the burden of increased costs onto consumers. Some experts believe this could be the start of a major shift in Canada's economy. Dr. Wendy Dobson predicts Canada may need to focus more on local production and self-reliance. David McNaughton believes this could be a pressure tactic from the Trump administration. One thing is clear, these tariffs are a big deal for Canada's future. So what do you think? Should Canada fight back with more tariffs or try to negotiate with the U.S.? I'd love to hear your thoughts in the comments. Thanks for tuning in. Don't forget to like, comment, and subscribe to stay updated on Canada's economy.